All right. Good afternoon, everybody. Hope everybody's doing good. Right. Hey, Matt, are you here? Let's see here. Can you guys hear me okay? Yeah. Hey, guys. Good, good. Where's Matt? Are you here, Matt? Can't see him. Hmm. All right. I'm glad you guys could hear me. Well, I was just on and I was hearing yeah, this is a different microphone. Let me see where Matt is. Huh. Let's see. No, he opened the room. He's around. Just see where he's at. I'm in the hotel right now. Doesn't look like you're having much fun. Oh, I'm doing great. He's typing something. Let's see where he is. I figured out how to connect both my microphone and another monitor. I realized I didn't need to power my monitor with my computer. I could have just I found out that I can connect it to just an external USB, which freed up a USB plug for my my headset. We'll be starting in a minute. Let's see. Where is that Matt? Trying the laptop kicked me off twice, so I started it from the office. All right. Well, when you get here, Matt. We'll just say hello when you get here. But I know you guys should be able to hear me okay. Let me share my screen. Let me turn on TC 2000 real quick. Now, remember, this is not a typical week, guys. And if you treat it like a typical week, you're going to get your ass handed to you. And I mean that from the bottom of my heart. If I can get you guys mittens, if I can get you guys those mittens to keep you away from touching your keyboard, from hitting your keyboard, I would be a very happy guy. That would be kind of funny. All right. So let's look at the drill down. All right. Okay. Can you guys see my screen? You know what? Let me also say hello to YouTube. Let me go to say hello to YouTube. Gotta say hi to YouTube. We'll be starting in just a second. You're welcome, Jack. Right. Let's get this here. I was hoping to see Matt today. We got 31 people on YouTube. We got Russell, we got Nathan, we got Randomness, we got Darren, we got Anthony, Naples. Oh, Matthew says hello from YouTube. Let me say hello to everybody. Hello, everyone. Welcome. Okay. No, he's not on vacation. He's here. Thank God I have another screen. It helps so much. All right. So, where's my TC 2000? Let me grab it here. All right. All right. I did not like, so just so you know, in the pit today we liquidated TJX. I didn't like how it broke this compression, and I don't really love the market, and just not like I don't like how the stock is holding on. So we did get rid of the stock, and I send everybody a note. So if you guys are in the pit, we no longer are in the stock. And I also changed the stock for the seasonality webinar we just had. I don't know if you guys saw that or not. Oops, let me take this, put this over here. Hey, Jim. One of the reasons why I said low exposure on this position, not a high exposure on this position. I don't like how deep it went down today either. No RWA found. BWA, Rochelle. BWA. You got the wrong ticker. Hey, Kriya, how are you? All right, let's see how many people we got. 247. All right, I think it's a good time to start. So, the stock market. The stock market's trying to, as you can see here, the stock market is very squirrely today. There's not much here, but it is up 0.18, which is not much. Uh, Daniel says AVGO. Daniel, I don't know how long you've been here or not. And I don't know how long you're planning on being here, but this is not a place where I answer questions about particular stocks. This is a place where I have an agenda. If you have a question about AVGO, send me an email. Thank you, Daniel. I appreciate it. Don't try to get in front of the line and ask me about a stock. I'm not going to talk about your stocks. Volume very low. Volume very. Oh, volume. Yes, I thought you meant my volume. So volume is extremely low. We have 13 million contracts and we're at the 50-day moving average. Well, Roger, you said if we go above the 50-day moving average, we can start buying. No, that's not. Yes, I did, but we're not above the 50-day moving average. We're at the 50-day moving average. And we're right below the 8-day EMA, which we bounced off really hard. Okay? Really, really hard. Volume is really low. Don't look for opportunities. Look for reasons not to take. You guys could hear me okay, right? Not my volume is low. You guys could hear me okay, right? Let me know if you guys could hear me okay. My volume, my quality of my video and audio should be pretty close to what I get at home and in the office. Okay, great. Thank you. So now, here's the thing. We we can right now break above this level, but you see how we keyed off for 3 days already. We couldn't stay above the 50-day moving average, and we're only getting deeper, 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 deeper into the holidays. Okay, only getting deeper, deeper, deeper into the holidays. So from my perspective, this can go up or this can go down. I'm going to give you the rule that I gave you last week, and that rule still holds. And that rule was very, very, very simple. Okay. Do you guys remember what that rule was? We want to recover 60% of this bar. Incidentally, if we cover 60% of this bar, or at least be above the all of these averages. If you're going to be above that average, you're going to be pretty damn close to being 60% of that bar, about 590. I think I said 598 last time or something like that. And it's not a science. There's no like mathematic formula to this. You just take the high, you take the low, you take about 60%. You could do it visually. The higher, the better. Ideally, we want to engulf this bar completely and start trading up here, ideally. But you could start taking starters when we're about 2/3 of the way up here. Now, if you look at QQQ, we're we're already at the moving averages. We need to get right here about 529-ish area or something to that effect. All right. The problem I still have is this. This is my big problem. And I really don't care what will happen with SPY because if RSP can get a rally, your whole rally in the SPY is going to be supported by the mags. And the mags never really sold off. So I don't want you to use the SPY as a gauge because even with the downside we saw, it's still very distorted. My suggestion would be to use the RSP because the RSP needs to start coming back up here. What I like about RSP today is RSP did not break the low. The SPY did not break the low. QQQ did not break the low. The Dow did not break the low. All these are really, really good things. Um, the fact that we didn't break the low on the SPY is very good. But again, RSP, if we break the low, it's going to be bad. We may just consolidate here for the remainder of the week, which would really not give us much to work with. Okay. So I want you to see, I think upside is almost down for today. I don't know, Cyrus. I don't know if it's upside. I don't know if it's upside or downside, but I know that um, the market, as we know it, is between the 100-day and the 200-day moving average. And in order for us to start getting bullish again, the market has to overcome the 100-day moving average, the 8-day moving average, the 15-day moving average, the 50-day moving average, and then maybe, only maybe, we could start getting some air. That's 493 stocks right here that we're talking about right now. So when you see this chart, you're talking about primarily this, the mags. There's seven stocks there. And I don't care what these things do. I mean, great. I mean, what are we going to start trading seven stocks? No, we're going to be trading 500 stocks, right? Or more. So that's a big, 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 big problem. That's a big, 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 big problem. Manuel says, how are you? Looking forward to learning something new from you today. Well, Manuel, what have you learned so far from me today? Have you learned anything at all today? And while we're at this, oh, good. I'm glad to hear that. And just to add insult to injury, look at momentum levels. Let's see how many stocks are firepowering this market. Look at how many stocks are making 90-day highs. There's 12. 12. 12 stocks. Apple, ALB. We're 12 stocks, folks. 12 stocks. 12 stocks. 12. Do you understand? There's just no momentum right now. So if you take away the Google, which is mimicking Fang right now, if you take away the Apple, if you take away the Tesla, ugh, looks like somebody already took away the Tesla. Looks like Tesla's rounding up. Looks like you can see some upside here. Um, Meta, let's see. Meta is not doing all that great. Microsoft starting to come up. But if you take these stocks away, it's not looking great. I am going to talk about spreads when I give you guys positions. So, so, um, so again, a lot of vulnerability, not a lot of certainty. Things can go either way, mostly randomness, not a lot to stick our attention on. Not at all, okay? Not at all. Have we done? Yeah, don't touch put on those gloves, those cooking gloves where you can't like type. Put those on and then keep your hands under your chairs like this today. All right? That's what you guys need to do today. Seriously. No, all jokes aside. That's what you guys need to be doing today. All right. How did I just turn off? Did I just turn off my? Oh, no, I didn't. I thought I turned off. Hey, Matt, are you here?
Yep, I am.
Yeah, you're in here. Do you disagree with anything I just said about the market? Are you there?
Because even if you get something, unless it's a day trade, you're going to have no action tomorrow. You're going to be sitting in a trade over a holiday
Yeah,
and then hopefully hoping stuff trickles back in.
exactly. Exactly. So be careful, guys. Be careful. Be careful. Okay. Be careful. All right. With that said, I'm going to give you a couple of stocks that I like. Now, just because I'm giving you stocks doesn't mean you should be buying them, but I will give you stocks that I like. Let's do the upside first today. Now, people were asking me last week, when should I do options? When should I do individual options? When should I do spreads? I'm going to give you a really good answer. Okay. I'm going to give you a really good answer to that question. I'm going to try to help you guys out right now. Okay. So let's just pull up an option chain. Okay. All right. Let's pull up calls. People like calls. They're easier for most people to understand. So let's look at the options 70 option delta. The rule of thumb is, the rule of thumb is you should do an option. You should do an option when you should do a spread, excuse me, when the individual option is just overly expensive, or or you could do your spread for less than 40% on the dollar. Okay. So what does that mean usually? It's not 40% exactly, but let me give you a good example. Let's say you do a $5 spread. In other words, you buy a 170 and you sell a 175. That's a $5 spread. Okay. And please don't ask me to explain what the difference between two strike prices is. You can go to customer service live for this. I'm not going to interrupt this. Okay. So you're here not to learn the basics. You're here to learn trading stuff. You can learn the basics from a gazillion other sources. So let's say we buy the 170, 175 right here. We buy the 170, we sell the 175. The spread is $5. The most we can make is $5. We can't make any more than $5. The only factor we have is how much we're going to pay. So you know my general rule of thumb. Now this is where you want to start writing things down. On a $5 spread, you shouldn't pay more than $3. On a $2.50 spread, you shouldn't pay more than a $1.30, $1.40. On a $10 spread, you shouldn't pay more than $6. But when should you go out of your way to do that spread? When you can get a $5 spread for $2, that's when you do the spread because you're paying less than 40% of the price of the spread. That means you're getting an edge in your spread versus the underlying. If you're paying $3 on a $5 spread, you're not really getting much of an edge. You're getting a sale price discount on how much you're getting for the opportunity to get into the trade, but you're not really getting an edge. If you pay $2 on a $5 spread, you get an edge. If you pay $4 on a $10 spread, you get an edge. So always check the spreads to see if you can get one for closer to $2 on a $5 spread. And if on a $10 spread, see if you can do it for close to $4. If you can't, do the spread because then you're getting an edge. Okay? The other time you want to do an edge is after a spread, is after a very long sustained move if you're buying a momentum play. Like not something like this here, but you're buying something like this here on a breakout. Why? Because the option you sell will have very high implied volatility, and it will make that buying side much cheaper for you. So if you're doing breakout, spreads will give you that staying power. Okay? So time to do spreads are debit. I'm talking about debit spreads, not credit spreads. The time to do debit spreads is when you can get one for 40 cents on a dollar, when the straight option's too expensive, prohibitively expensive, and or when you can do the spread for 40, not 50 or 60 cents on a dollar, but for 40 cents on a dollar. Okay? Now, my suggestion is to review what I just said. So let's see these questions. Let's see. Hopefully these are normal questions. Debit spreads and calls or versus calls, nowhere to trade either. Michael, I don't even know if that's a question. I explained it's a debit spread. How do you value delta on the spread? Hey, Matt, look at you with your ho, ho, ho.
I'm festive.
Good for you. I like that. Santa, ho, ho, ho. I like it. How do you value delta on a spread? Scott, just look it up in Investopedia. Do you need me for explain this to you? You look at how much you have positive one, and then you look at how much you have negative one. You take the positive minus the negative. It's just simple. It's simple algebra. Just go up in Investopedia. How to determine value on spread. And by the way, if you go to your Thinkorswim, it'll automatically just type in the spread. It'll tell you what your net delta is on the spread. All right. Want to make sure you understand that. All right. All right. So it works the same way to the put side and it works the same way to the call side. No, I don't do in the money. I don't do in the money spreads, Ken. I do actually add the money spreads. I like to start off. That's the other difference. I was just about to talk about that. If you guys know that if I do a individual option, I like to go 0.70 in the I would like to go 0.70. I want my delta to be 0.70, near 0.70, 0.75, 0.80. This is the sweet spot right here. But if I'm doing a spread, I'll start off at 0.50, which will usually be right at the money. And the reason I'll do 0.50 and the reason I'll do 0.50 is because that implied volatility and that lottery value that I'm getting here is going to be even more offset by the option that's further out of the money. it'll have all implied volatility because on the out of the money options, the implied volatility, they're more speculative. There's more implied volatility. So I'm buying a crappy option, yes, but I'm selling even a crappier option. Whereas if I'm not selling anything to offset my level of crappiness, uh, I'm going to buy a good option. Does that make sense? Basically, if I'm going to buy a garbage car, I'm going to buy it with like gambling money. But if I'm going to buy a good car, then I'm going to buy it with investment money, if that makes sense. Add the, what'd you say, Matt?
I didn't say anything.
Your video quality is good. Are you using the camera from the work?
No, I'm using the older camera, but I went outside.
Yeah, I'm using the older
Better
one
lighting.
too. The older one looks pretty good when you have a lot of light, you know? Anyway, guys, so you understand? I would be writing this down and I would be listening to it, right? How many days till expiration? It depends. It depends. There's two ways to look at it, okay? Um, One way to look at it is how long you're going to be doing the trade. If it's a day trade, go out 5 days. If it's a day trade, for sure. If you know it's a day trade, go out 5 days. Or like the ending of the week is fine. Like don't buy Friday. If it's Friday or Thursday, do it the next Friday or Thursday. But typically go 5 days out. Just go to the next Friday, this Friday or if you're buying on Monday, buy Friday but if you're buying a swing trade right now, you want to go about 3.5 to 4.5 weeks, about a month. That's the sweet spot right now, right? Very, very, very important. So again, if I'm doing spreads, I'm going to want to do it if the stock has been going straight up and I need the staying power. If I want to offset my volatility, if I can get a better price, if I can pay $2 on the $5 spread, because then now I can make $3 profit potential, which gives me an edge. You see, versus $2 or $2.50 profit potential. How expensive is the spread? How much am I going to get offset on the spread? Versus what the cost on the option is. Is it a pullback? Is it a swing trade? Am I day trading? If I'm day trading, you don't need to go beyond 5 days. You can even do 2, 3 days. Just be careful with zero. I'm not a big zero expiration guy, but because you can always offset that option. But 5 days on a add the money option on a add the money spread, it's a very, very, very good way. Because even if you're not going to pay a lot for it. You're not going to pay a lot for a debit spread that has 5 days to go. You may pay like $1.50 on it or something like that. It's not going to be a big loss. All right. Do you look at ATR to pick trade duration? No, Cyrus. I look at the market to pick trade duration. I look at the market and the stock. I don't look at the ATR. I look at relative ATR, but not ATR. I look at relative ATR. So, in other words, is the market going straight up or is the market going sideways? If the market's going straight up, I'm probably going to buy an option that has 2 weeks to go. Is the market sitting and just going back and forth on the 50-day moving average and the stock is running up? Same thing. Something is running up. There's something running up. Now, if I'm consolidating or I'm entering a bad seasonality period, I'm going to go up to about 5 weeks. So it depends. It's anywhere from a week to 5 weeks, depending on what I'm looking for and the conditions. Just depending on what I'm looking for and the conditions. Very, very, very simple. Like for the pit, ideally, over the last couple of months, taking 5 day out debit spreads probably would have been ideal. Whereas like 4 or 5 months ago, when the markets was really moving, taking individual options would have been ideal. It just depends on what the market's doing. But I know that from the feedback we've been getting, uh, you need smaller move to make money in a debit spread than you need in an underlying stock to get the percentage you need. And number two, you get a lot more staying power. So there's really no reason not to buy debit spreads. The only reason not to buy debit spread really is if you're looking for a big move. If you're looking for a big move, your debit spread's going to limit your move. But that's the downside of a debit spread. But if you're looking for a 10, 20, 30% move, it's much easier to get a 20% move on a $1.50 debit spread or a $2 debit spread Think of it like this, okay? Let me give you an example. Let's say you buy a debit spread and it costs you $2.50. That's going to be the average cost of a debit spread. And let's say that debit spread goes to $3, okay? Well, if that debit spread goes to $3, you just what, made 20, you just made 20% on your money. So to go from 250 to $3 is not really a lot of work versus imagine you buy a stock for $8 and that stock now has to go almost $10. So what's easier for an option to go from 250 to $3 or from $8 to almost $10? Do you see that? And let's say the stock goes down. Well, if the market goes down, use two, three, $4 in that stock like this, whereas the option, you went from $1.50 to 75 cents or 60 cents. See what I'm saying? So it makes a lot of sense. We're not talking admin debit spread, credit spread. It's like asking me, you know what you're asking me, administrator? You're asking me, is it better to go to Alaska or better to go to Hawaii on vacation? Have you ever been to Hawaii in August? Do you want to go to Hawaii in August when it's nice and hot? Do you understand? Did I answer your question, administrator? You're asking the wrong question. You're asking me the wrong question. Chris says, is most of what you have just been saying covered in the full-time trading bootcamp course? None of what I just covered is covered in the full-time trading bootcamp course. I wouldn't cover that material here. Don't be silly. Let's continue. Please, now, see, guys, you see what you're doing? This entire conversation, the conversation was individual stocks or debit spreads. You notice the word credit spreads did not come out of my mouth, did it now? But all of a sudden, we have a bunch of eager beavers talking about credit spreads here. Have I mentioned credit spreads? Did I talk about credit spreads? Did I talk about the rules for credit spreads? Did I compare credit spreads with anything I've talked about? No. Can we not talk about credit spreads today or we're going to run out of time again? Okay, good. All right. Do you have a service that's appropriate for weekly call and put buys versus spreads? Cannot sell options in an account. Al, selling options has nothing to. Call customer service. The question you're asking it does is isn't making any sense. Do you have a service that's appropriate for weekly calls and put buys versus all of them? All of our programs are appropriate for weekly call and put buys versus spreads.
except
Versus
for weekly cash flow.
the only I was just about to say the only program you don't want to buy is weekly cash flow because that's spreads. The rest of them are not spreads. Omar says if when I make a trade, I always look for 25% profit. According to your experience, how many days should I take a contract? Well, Omar, I hate to tell you this, but you're asking me a question, but while you're asking me a question, you're basically telling me that you're not going to listen to anything I say. Um, Omar, why do we not take 25? Always look for 25% profit. Folks, can you tell Omar why looking for a 25% profit is one of the biggest mistakes Omar could be making in trading? And then maybe I'll answer his question when he sees the error in his ways. Um, let's see now. Good, Raymond. No problem, Gus. Stick to the top. Yes, please. Agreed. Guys, Roger's trying to. Yes, I am. Don't upset me on a holiday. Let me teach. What's wrong? I have no idea. It's meant to be on holiday. Yes, trading P&L. You see, Omar, you come here every day and you seem like you're paying attention, but you see what Carlos just told you? You see what Chris just told you? You see what Sean just told you? Don't do that, Omar. Don't play games here. Do that somewhere else. Don't play don't trade your P&L. Don't trade your P&L. Good. I'm glad you got it. And what I'm even better glad about is that 10 people told you that here instead of me. I don't want to be the bad guy anymore. Don't trade your P&L, Omar. So if you're going to ask me a question, first show me that you actually listen to what I say. Barbara says with market 3 hours in the SPY, nowhere near recovering, 60% down day. Do we resign ourselves to it? Just not happening today. Hey, Barbara, did you notice what I've been posting on Telegram? What did I say this morning? What did I say on the Telegram? What did I say on Friday? What did I say Friday afternoon? And what have I been saying here the first 20 minutes? Did you get any of that? Let me know, Barbara. Can somebody tell Barbara what I've been trying to say for the last 3 days? Barbara, remembers get the gloves out that avoid you from taking trades and sit on them while you're at it. Did you get that part? Mittens. Thank you, Ben. Folks, I'm really just trying to help you here. I'm not trying to sell you any. I have nothing to sell you. I'm really. All right. Let's do Mandela's short side. Oh, actually, we were talking about long side first. Let's do it. Google. I already started long side, so let's do long side. How are you doing today, Matt?
Pretty good.
Are you at home or are you traveling?
No, I'm at home. No, I'm just on the back porch.
How's the weather in our neck of the woods?
It's gloomy, overcast. It looks like Seattle.
I see. Is it cold or humid?
It's a little chilly. Getting a little cold sitting out here.
I got it.
I got long sleeves on, but
Al, send me an email, roger@rogerscott.com. I'll help you out. Google, 25 days to go. So let me show you. 25 days to go. Here, you can get the 71 strike price, 185 call, or you can go right here by the 195, and you could sell the 200, and that'll cost you. That's a good price option. It's about a $2 or something option. That's a good value option, and the spreads are tight. Okay. All right. I love what I do in my office, Omar. Let's do the next one. Um, ALAB. Love this stock. Looks amazing. Right here, 74 is too expensive. Let's do a spread. We would go 140 and then we would go 145 right here. Right there. This one I would definitely do a spread. And I would use I would go right here about 118 as a stop loss. I gave you this one last week. I like it still. I would use a stop loss right around 61, 66, 25 days to go. 72 delta. You don't need to go with an option here. 62.50. If you want to go with an option, you can buy the 67.50 and sell the 72.50. It'll cost you less, like a buck 50, and then you have $5 upside, which is not bad. Okay. Ho ho ho. I got to get my wife one of those hats, Matt.
everybody loves the hats.
I love the hat. I got to get myself and Rachel one of those hats. VRNA. Nice compression breakout. Right here, stop about 39.60. 25 days to go. 86 delta. Or you can buy the 45 call and sell the 50 call. You will do this for about $1.50 and you have $5 upside. All right. Hey, Bob, how are you? Now let's do the short side. DB, let's do the short side. Pizza. Oy vey. What a stinker. It's got volume rising too. 25 days to go. 42.50 put. Now, stocks that don't have a lot of implied volatility, like consumer staples, you don't need to do debit spreads on them because you're not going to get a lot from the option you're selling. You understand? Just something to think about. Um, BCE broke out of a compressor to the downside. Volume is picking up. 25 days to go, 79 delta, 24. Like when you see an option for $1.50, $1.60, you don't need to look for debit spreads. You know what I'm saying? 24 put right here. ZTS. This stock is breaking down. I really like how it looks. right now, and it's on the low of the day too. But again, today's one of those days. I would put a stop loss right here, the 15 day around 171. 25 days to go, 81 delta, 170 put, VLO. I wonder if energy is going to go lower. What do you think, Matt?
Uh, well, we're in winter. That's usually good for energy.
Yeah, yeah. I mean,
I think
USO
it might
is,
hold the floor.
look at USOs, just look at that. Nothing, nothing. Anyway, where am I? Where am I? VLO. Yeah.
I think it
Uh,
might go down to the base, but
yeah,
I don't
yeah,
see
yeah.
it breaking any lows.
Let's see. We'll give this we'll give the stock a few days. 25 days to go. 68 delta, 121 put. Look at this Bloomin' Brands. Whew, look at the volume coming up. 25 days to go, 77 delta, 1250 puts. I remember
Those are
we were
restaurants, right?
a what?
That's restaurants, right?
Yes, yes. I remember we were giving a short on the stock up here, up down here, down here, down here. For the last 2 years, we've been going talking about this stock. All right. STZ. I would be careful here. I like this one better. Mandela's. It's more of a mature trend. I think we can see a little more downside. I would use this pivot at 62.55 as a stop. I would go about 25 days out. I would go somewhere right here, 61 put. Look, no, nothing here, but look at the market maker. He's cooperating. He's being a good boy. 61 put, January 17th expiration. Okay. All right. That is, oh, one more. I got one more for you. Western Union broke down of this compression right here. Nice looking stock, and look at volume picking up. Tried to go above the 50-day, tried to have a fake out and collapsed. I would put a stop loss right here. Couldn't do the Santa rally. I would put a stop loss at around 11.15. I would go 25 days out to 78 delta, and I would go to the 11 put. That's what I would do. No, Delta shows there's just nothing on it, but you could figure out if it's in the money just by kind of seeing what price is and going above it. But it's all there. I mean, again, folks, I'm going to tell you this. I don't want to get into it, and I hope Matt has some seasonality, but I'm going to tell you right now, this is not a time. This is not a time to go crazy. The best thing you could do is wait, and I'm not joking. The best thing you can do is wait for the RSP to be above this 50-day moving average if you're going to go long. Please, please, please. It won't take a lot to get there if the market's going to get bullish. But here's the problem putting yourself into. Unless you're trading the mega caps, knock yourself out. But here's the problem. If these stocks give up the ghost, there's nothing holding us right now over here. So you would be buying the market not in a bad technical position. You would be buying a market in a very strong technical position. They're very strong technically, but momentum, the inside. There's nothing pretty inside of them. They're hollow. It's only 7 stocks doing this. And if these stocks give out, there's not much there. So if you want to pin yourself to 7 stocks, then you can go ahead and buy these right now. But if you want to wait, my suggestion is to wait for RSP to start trading above the 50-day moving average. Nothing good will happen because you want institutions to start buying our SPY ETFs. Now, I'm going to tell you guys a shocking discovery right now. I know none of you guys have thought about this, but do you guys think that there's anything that I'm showing you right now that institutional traders that manage large hedge funds do not know? If you think there's something I know that they know, let me sell you a bridge in Brooklyn. You know what I'm saying? They're watching this right now. They know this. They know that this is a vulnerability, and they know that if they start buying SPY funds, they're going to be buying RSP because 493 stocks are not playing ball. And they're not going to do that going into the holidays. You know why? Because their ass will be fired. Because if their boss comes back next week and says, you decided to load me up on a bunch of ETFs or stocks that were part of an index where you knew damn well where only seven stocks were going up, is that the kind of trader you are? You didn't see that basically the smoke was coming out of the car as it was driving. You didn't see the warning signs? Of course, Ken. Of course. Of course. Not only are they aware of it, they're creating these scenarios. So my point is, I don't know how long it's going to last, but I'm telling you right now, this we need to see this made whole. We need to see this made whole. We need to see EQ here. We need to see this. We need to see this above the 50-day. Now, I want you to know something. 2 good days and would take us up there. We're not talking about years, months. I'm talking about we need to get back to the price action from the beginning of last week. Okay. How do big banks profit under those conditions? Well, you're making an assumption, Omar, that big banks are trade directionally. Where if you listened to what I said during the stealth webinar and the stealth and the data miner webinar, I explained to you that big banks don't trade for profit; they trade for liquidity. Their job is to continue doing transactions, not on the profits or loss. That's not how they make their money. Okay, they need to put liquidity by how does okay. Guys, can somebody tell Omar how Charles Schwab has been making their money for the last 2 years? Can somebody tell Omar? Nope. Omar, there's no commission. Omar, where have you been for the last couple of years? Do you notice that Charles Schwab doesn't charge commission anymore? How does Charles Schwab make
On
their money?
stock.
Huh?
They charge on options.
And what else?
That's it.
Yes. No, no. Charles Schwab is no longer a broker. They're a bank now. There's articles all over this. I talked about this like a year ago, a year and a half ago. Charles Schwab, Charles Schwab has a huge amount of interest on unused capital. So let me explain to you how it works. Every night, there's a interest rate that the banks pay you, and there's an interest rate. It's called float. Okay, it's called the float. You get interest on your float. There was a point, Matt, when I had so much, yes, on your overnight margin, there was a point in time when I was managing commodities where I had so much capital that I was actually making a pretty good living just on the interest rate.
Mm.
Because there's two different interest rates. There's an interest rate that the customer get, and then there's the interest rate the broker gets. You make the difference between the spread is what the broker make. Charles Schwab has been making money not from commission. They took away commission, Omar, so that more people would deposit money with them, so they can make money overnight on your float. That is how they make money. Okay. This is not a theory according to Roger. They make their money, huge percentage of their money is made from being a bank. Yes, exactly. Right. So Omar, you got to get with the program. And we've talked about this countless times here. This is not the first time we're talking about this. What did somebody say here? Was doing that for JP Morgan with JP. Yeah. Yeah. Sweep all your idle funds. It's called sweeps, making money on your float. They sweep your money overnight and you make your money on the that's why I tell people put your money in a T-bill. If your money's in a T-bill, they can't take your money overnight and you make the interest on the T-bill. You understand? Because they can't break your T-bill overnight. So this is only on cash that you have that you're not using for And you can use margin. You can use T-bill for margin. You see, they're not going to tell you that, but you could put all your money in the T-bill, and you can use that T-bill for margin, and then they can't use your float overnight. Okay, so just so you guys know that, just so you guys know that. All right, Matt, take us through seasonality, my friend.
All right. Oh, excuse me.
Bless you.
These dogs have been silent the entire time. And as soon as I go to
Amazing.
the season out, they start, now they're barking.
Amazing. I'm gonna grab some water. You talk. Do I need? Let me give you the screen so you can hear. There you go. I'm just gonna grab some water here.
All right, folks.
All right.
Here is seasonality to the long side for December 23rd, Christmas Eve's Eve. We have it right here. Got it highlighted for you. Pretty strong numbers. Santa Claus has come to town on the long side. Utilities, super strong. Real estate, communication are look good. Tech um, also looks fantastic. And that's seasonally, but also consumer discretionary right up here. That looks pretty good too. Here is the short side, for which we have nothing. Look at all these profit factors. They are under one. Here is 10-day hold or 2-week hold. You've got consumer discretionary, healthcare. Those at the top, they look pretty good. Industrials don't look too bad. Uh, and then all the way down to the bottom, basic materials, those look good as well. But pretty strong showing from the profit factors. The accuracies, those are pretty high for 10-day hold, which is essentially just a 2-week hold. Did you see what Bill wrote, Roger?
Let's take a look. Hold on.
That's funny.
Matt, do you have to go to Miami to give?
I don't think they have the loop down there.
I wouldn't know. I've never seen it here. No, I'm. I already had some breakfast. I had breakfast downstairs.
I've got lots of family in town right now.
Oh, good for you.
I do my Christmas with my wife's family the weekend before. So my brother-in-law's here, my nephew, his wife.
Good.
All right. On the long side, although some of the profit factors are a little squirmy, 450 out of 550. Pretty awesome. On the short side, you've got 80, which is good for the long side. If the shorts are bad and the longs are good, that's good for us. 10-day hold, we've got 101 to 70, 257 to 60. That's pretty good. But profit factor is really what I'm interested in. So for break even or profit on a 2-week hold starting today at the close, you're going to be in the money on 453 out of 550. So kind of mirroring the long side. Thanks, Ken. Yep, it is all daily data. So looks like seasonality is pretty strong.
Good.
Uh,
Good. Good, good, good. Good. Excellent. Excellent. As I said, I don't have a problem with any stocks right now. My problem is with the market right now. Uh, can I go ahead and share my screen again, Matt?
Go for it.
Yeah, let me. Oh, there you are. Yeah. So my problem here, I got two monitors working here. It makes life a lot easier right now.
Yeah.
Yeah. And I was able to plug the monitor to a USB outside of my computer, which allowed me to plug in my mic. So I found out a trick around getting an extra USB out of my computer, which I needed. So it makes life easier. It
Oh,
really
cool.
makes life so much easier. Yeah. So folks, I'm telling you, I know the market's not looking bad right now, but after a drop like this and after a move like this hitting the 8 day, you want to wait for some clarity. If you look at the equal weighted SPY, you will see that the broad market is doing very little right now. And this is aside from the fact that it's a holiday. After a move like this, a consolidation is not abnormal. You want to see price start gravitating sharply, strongly to the upside. If you don't, there's a really good chance the market will undo whatever it is that we want to do. Video in VIP room, how to interpret your seasonality comments. While I do understand
I
why
think
it's
there is one,
yeah, there
but
is
we'll
one.
make another one.
There is one though. There is one, Vivek. There's several actually. All right. Yeah, it's a 50-50 market. You don't have edge. Now, folks, I am going to be not around for the next several days. I'm going to actually enjoy some time with my wife. Today's Monday. I'm going to be driving back on Thursday. Now, I will be trading if I see something fit, and I'll be updating alerts, and Matt and I will be on the clock. So we're not going to be doing any live shows, but we are going to be watching existing positions. If we feel that we need to put a new position on, we will put a new position on. If I see something in the pit, which I probably won't, I'll put something on. The point is, we are around. We're not going anywhere. We'll be answering our emails. So we're not going to be here in the front, but we'll be here in the back. So if you guys want to communicate with us, that's fine. Now listen and listen good. Tomorrow's Christmas Eve. Nothing good is going to happen. You're not going to miss anything. Wait for this to hit. Wait for RSP to hit 180, 183. If you feel like speculating, keep your position size really, really, really small. Okay. All right. My email is roger@rogerscott.com. Matt is Matt@rogerscott.com. Matt, I really love the hat. I think it's
Thank
fantastic.
you.
I wish
I got
I.
Christmas shoes to match it too.
Oh boy. Oh, I
Yeah,
haven't seen.
I'll have
What
to
do they
show
look
those
like?
off another day.
What do they look like?
I let me grab them.
Yeah,
I'll
let me
go
see
grab
the.
them.
Yeah, I gotta see this. I gotta see the Christmas shoes. The market's open tomorrow half day. So usually when the market's open half day, you don't have any. Let's put it this way. There are no institutional traders that are putting in trades right now. So you got to go for trades that have really high volume. You're dealing with fire right now. You're
There they
playing
are.
with fire right now. Oh my. Oh, those are
Yep,
cute.
yep. They've got drinking reindeer on them.
Yes,
Eggnog.
very, very nice. Yes. Yeah.
My wife hates them.
Well, another reason to wear them. No, I'm just kidding. All right, guys. You have a great day. Matt, I'll reach out to you afterwards about something totally independent. You guys have a great holiday. I'll be answering. I always answer emails. I answer emails on Sundays, on Saturdays. I'm always answering emails. If you guys need anything, just let me know I'm around, okay? I am around. Again, please don't expect anything over the next several days. Not because we're lazy, not because we don't want to trade, not because we want to help you make money. It's because the RSP looks like garbage and it's a holiday. It's a double whammy and it's not for us, it's against us. So take
Yep.
it easy, enjoy your friends, have a little time with your family. I'm going to do the same. Matt, I'll see you later. Bye, guys. Have a great holiday. I'll
Bye,
be back
everyone.
Friday. I'll be back Friday in my office with Matt, okay? Or I'll be at home and Matt will be at home. So yeah, yeah, yeah. Not at the office, at home. But and then following we'll be around. Bye, guys. Have a great, great, great holiday. I'll see you later, Matt. Ho, ho, ho. Love the hat. Bye, guys.
Bye, everyone.